business ideation. What is ideation? Ideation is the process of generating a viable business idea. You don't just wake up in the morning and say, now I am running a business, I want to start this. But there are elements that are involved when you are developing a business idea, when you want to start something in the market. You need to do the market research before you invest your resources. Don't just see others running businesses being successful and says, no, I am going to start my own today because I have seen elder so and so is doing this and he is making a lot of money, so I am going to start the same. If you do that without proper market research, I will tell you that your business will be guaranteed of a fail. You identify market gaps. For example, right now we are in summer and it's very hot, especially today and the past weekend, it was very hot. You can see that on your area or in your area, there is no one who is selling things that are in line with the summer products that are required. For example, during summer or during hot weathers, people, they require things that are cold. For example, ice cream. So you can just have a look to see, is there anyone who is selling ice cream? There is no one. Then you can start selling ice cream in those areas. You can also analyze the competition to see, oh, there are people that are selling ice creams, but how are they doing it? For me to be a rival to them, am I able to provide a specific brand or in a specific way, which is unique from the ones that are already in the market? Analyze the profitability. For example, there are ice creams that are not ideal to sell maybe in a location whereby the income scale is low there. So you need to analyze, if I order an ice cream for 7 rand, is there anyone who's gonna buy it for 10 rand in that specific location? And when you are thinking about businesses, there are 2 key elements. Number one element is about innovation. Do you want to start something new in that market? Do you want to start something new? If you want to start something new, we call it innovation. Also, imitation. Imitation is whereby the product is already there in the market, or the service is already there in the market. But on your side, you have got a better idea of improving that product, or you are able to package your product in a unique way whereby people will prefer your product as compared to others. So this is what we call imitation. The product or service is already there in a market, but we have got unique ways of making it more appealing to the consumers. You also, the tools that we can use when you are starting businesses, you need to brainstorm. Think about the business that you want to start. You write down the notes. Okay, if I do this, I need to do it in this way, joining the things together. You can also use a SWOT analysis. A SWOT analysis, we are talking about the strength, weaknesses, opportunities, and threats that are involved in that particular market. The strength, for example, when you are talking about weather, the strength, we are talking about it's hot and the people, they want ice creams because it's hot. They will not buy coffee, but they will prefer to buy ice creams. So you'll be analyzing each and every element of SWOT analysis. Prototyping, this one is applicable when you are starting something new. You can't just, for example, you can't just produce something in bulk before you have tested the market. You need to test the market first, then if you see that your prototyping is going well, then you can start to increase the quantities. There is something that it is also similar to something that we call a minimum viable product. You can't start by ordering tons and tons of maize. If you want to sell maize on a specific area, you can't start by ordering tons and tons, but you start small, then you grow as the market is growing. So we have got different business models that are existent in the market. The first one is business to business. When you are talking about business to business, you will be analyzing to say the type of business that I want to be engaged in. Do I need to supply to other businesses, or I need to target the final consumers? So when you are targeting other businesses, we call this model as business to business. For example, we have got accounting softwares like SAP, Oracle. Yeah, these are the examples of business to business. You'll be targeting your market as other businesses. You are not targeting the final consumer. Then business to consumer is whereby you are targeting the final consumer, the end user of the product. For example, when you are buying things in Woolworths, when they are designing their business model, they will be targeting you as a final consumer. And then we have got consumer to consumer. An example of that is a Gumtree. When you are doing your business there on Gumtree, or when you are posting something there, we call it consumer to consumer. Then we have got consumer to business, whereby you will be targeting, as a consumer, you'll be targeting other consumers. For example, a freelance, when you are applying to be a freelance at a specific organization in a certain industry, the business model is called consumer to business. We have got different types of businesses. You need to know which business do you want to be engaged on, the types of business. Do you want to go as an informal business? An informal business is whereby the business is not registered. You are just running a business. You are just selling your tomatoes out there, and it's not registered. Then partnerships. We have got partnerships whereby you'll be sharing ownership, and you pull the resources together with other people so that you can be able to start something. Usually partnerships, they are ideal for people with different skills, which are required to run a certain business. You have a joint liability with your partners if you would like to run your business as a partnership. Then sole proprietorship, this one you'll be a single man or a single owner of the business. You're running alone, and you'll be personally liable for any liabilities that might be involved in that business. And you also have full access to the gains and rewards that the business will be generating. Then JSE listed firms, these are publicly traded companies on the JSE. I'm not going to concentrate much on this because today I'm more focused on small entities. This one is for large organizations. Usually they are listed for specific needs, for example, raising of finance, or access to certain markets. Non-profit organization, if your business is solely to serve the community, is only for the community benefits, of which with my experience in the industry, I have worked with a lot of non-profit organizations. But when you dig deep into them, you will see that they present themselves as non-profit organizations, but actually they are benefiting indirectly through those organizations. So these organizations are not for profit. They are just acquiring resources or money from other organizations or from well-wishers. Then they invest or use the money for the benefit of the communities. So there are pros and cons on each and every business structures that I have spoken about. There are pros and cons. For example, when you are running an informal business, the advantage is that you don't need a lot of capital. It's very cheap to set up. If you want to sell your tomatoes there, if you have your 20 rand, you can actually start a business ordering, and then you start to run a business. And it have a few regulatory requirements. It doesn't actually have a lot of stringent regulatory requirements. But the disadvantage is you will be limited to get finance if you want to grow your business as an informal business owner. You have limited access to funds. Lots of banks or finance organizations, they are not willing to finance informal businesses. They want you to legalize, then you will be able to access the finance. And legal protection, there is no legal protection for your business. It's limited, and also the growth is also limited. Then partnerships, as I said, if you have got different skills, or someone have got money and someone have got a skill, they prefer to have such type of organizations. Then they can share their experience, they can share their skills to start a business. They will pull the funds together and start the business. But the disadvantage is lots of partnership. Actually, myself, I don't encourage partnerships a lot unless there is a real need. If there is a real need for you to start a partnership, yes, you can start a partnership. And when you are starting a partnership, make sure that you have got a partnership agreement in place that is clear and to the point. That can address as well, if you have got disagreements, how are you gonna resolve them? If you fail, if you are a partner of two, if you fail to settle the disagreement between two of you, what's the next step? You must make sure that you have got those partnership agreements, because failure to do that, usually it will end up in tears. I have seen a lot of partnerships, people, they ended up being enemies. So to avoid that, you must make sure that you have at least a sound agreement in place. And when you have a partnership, you must be aware that the liabilities, you have got a joint liability. Both of you, you are liable for anything that can happen in that partnership. Sole proprietorship is simple to set up, like you are the only person. It's more like the informal business. It's simple to set up. You have got direct control, and the operating costs, they are generally low. And the disadvantage, you'll be personally liable for any liabilities that might be involved within that specific business. Then JSE listed firms, I'm gonna jump that. Non-profit organizations, the major advantage is that it is eligible for tax exemptions. So when you are running a non-profit organizations, you have got access to the exemptions that are provided within the Tax Act Section 10. You will be able to benefit that. They are not taxable to a certain extent. Then the disadvantage, obviously, they have got strict governance and limited funding. Choosing the right business structure for tax purpose. This one is very important. When you want to start a business, you must always have a head of tax to say, okay, I am starting a sole proprietorship. What is the advantage in terms of taxes, so that when you are setting up your business, it will be able to cover your tax expertise. So when you have a sole proprietorship, you are personally liable for tax, and usually the taxes for individuals, they are high. If you are earning a lot of income and you are running a sole proprietorship, your taxes, they are all, you'll be taxed on your above 45% tax rate. So you need to also consider partnership is also the same as sole proprietorship, but you'll be taxed individually, your share of profit that you have gained in a partnership, which means the partnership is not taxed on its own, but the partners are the ones that are taxed. Private companies, these are, they have got standard rates of taxation, and the liability is limited. JSE Limited, listed companies, I'm going to jump that. NPOs, as I said, they are tax exempt. Let's go to number 2, business planning. Business planning. So when you are starting a business, you need to plan. You can, like what I said, you can't just wake up and say, I'm going to start a car manufacturing company, but you need to start by planning. How do you want to run your business? Because the business, it needs capital. And that capital, you need to identify how are you going to raise the capital that you need to run that business. Are you going to do it through a debt, or are you going to do it through contributions, which is equity? Budgeting, you need to create budgets. This one is very important. And a lot of small business, they fail in terms of budgeting for their organizations. You need to prepare and operating, whether you are starting or you are already in the business. Make sure that you have got budgets for your business. When you are starting the financial year for your business, set out targets. Know the expenses that the normal operating expense of your business. Know when you want to acquire capital assets. So those things we always fail as small business entities. We just run without targets. You don't even know how much sales do you need to obtain in October. How much sales do you need to obtain for the 2024 financial year? So budgeting, it assists you to push a little bit more. If you give a target to say, I want to hit 1 million in the month of October. So when today is the 15th and you are at 200,000 your sales, you will be giving yourself more pressure of getting sales so that you can have the desired result and meet your target that you want to meet. Operating expenses, you must list your operating expenses, the expenses that we have to run the business. For example, rentals, utilities, etc. You must list them and know that the debts that they need to be paid, and provide for them in your planning. Capital expenditure, like what I said, if you want to invest, you need to also put them in budget. Unchecked expenses always erode profit. If you don't check your expenses, if you can just run without checking your expenses, you will see that you are selling, but it's a donation that you are providing to the market. Number 3, marketing fundamentals. In terms of marketing our businesses, the key concept is the 4 Ps. The 4 Ps. Number 1, product. How are you packaging your product? How is your product being designed? Sometimes design on its own, it speaks a lot, a volume to our customers out there. So we need to make sure that our product on its own is presentable and ready for the market. And price, depending on the area that you're operating, you can't charge 1,000 for selling ice cream in Cosmo City, but I can charge maybe 1,000 in Sentin. You never know. So pricing is also a key to consider. What percentage markup do you want for you to obtain on your product that you are selling? place, like the example that I just gave, do you want to operate in high density areas, or you want to operate in high market areas? The place or the location, you need to plan. Where do you want to deliver your product? Promotion, how are you gonna get your product known to the market? How are you gonna advertise your product? How are you gonna place your product in the market? So there are different types of marketing. Can do by branding and positioning, building an identity and a unique market position. Can also do digital marketing, search engine operations. These ones I prefer. If you want to be engaged on these ones, you can also reach out to the expertise, the people that know how to do these things. Customer acquisition. If you are starting a business, yes, it is important. How are you? Which plans do you have for you to obtain new clients? Then retention. You must be able to provide an excellent service so that you will be able to retain the clients. And those clients that you retain, usually they are brand advocates. They are the one who will be marketing for yourself. For your own information, we have got a running practice. We have been running since 2019 now. And I can tell you, we haven't spent a cent on marketing as yet. All our clients, they are coming through referrals from our existing clients. And we are busy every day working because of the quality of service that we provide. And when our clients are happy, they call their friends. And the friends, when they are happy, they call their other friends. So this is how important it is to provide a quality service to your client. When you get a one client, make sure that you are going to provide excellent services. And those clients, they are going to advocate for you. This is a very cheap method of marketing. Like what I said, like we haven't spent a cent in terms of marketing. When you want to grow, we will be looking in those things. But at our size now, we are comfortable and we are happy with our clientele, and we are growing slowly but surely through client retention. And those client retention are the ones that are helping us. So the key to that is the quality of service. It's not about the pricing. When you are getting a new client, usually don't charge too much prices to scare away them. Try to accommodate them in your pricing. When you accommodate them, you will be able to provide the excellent service. Then they will see the value in you, and you'll be able to increase your prices on your next service. So the retention, I don't know how important I can emphasize that, how many times I can emphasize that, but client retention is the key for business growth. I'm going to number 4, financial fundamentals. Point number 1, in terms of financial fundamentals, invoicing. A lot of businesses, especially small businesses, they don't have a well-structured invoicing strategy. You will see, when I want to buy something from you, or when you are providing a service from me, you just say, I am charging 500 Rand. You can give me 500 Rand. But there is no specific invoicing or document that I get from you for your prices. So invoicing, a well-structured invoice, it helps even in your financial cash flows. For example, when I'm sending an invoice to you, my invoice is supposed to have the details of where I am going to pay the money. Must have the details to me, the address of your organization. And nowadays, because of technology, like the one that we use in our firm, it automatically follow up for payment. When I invoice you, I already set up to say, if this invoice is not settled within this, maybe within 3 days, within 7 days, please follow up. So my system will automatically follow up for payment. You will see the notification to say, you have got an outstanding invoice that need to be settled. Please settle this invoice. Maybe me, I am not even in the office, but the system is doing the work on its own. There are softwares that we can use as startup businesses or small to medium businesses that are recommendable. For example, there is SMEs. This is an available software at a very cheap price. You can use that for your business. We have got Zero. Zero is the one that we mainly use in our business, and it's also affordable. Wave, it's a good software, and the reason why I recommend that, I recommend this one to the business that are just starting, the one that want to spend R0 in terms of invoicing or accounting softwares. This one is available for free. You can use it. It have got unlimited invoices that you can send to clients, quotations. It is for free if you want to start up, but it's not conducive, or it's not a good software for the businesses that are growing because of some features that are not available to it. There is express accounts. If you want a once-off invoice, the ones that the invoicing system, the one that you can just buy and you don't incur monthly expenses. This one is also affordable one. For bigger businesses, they go to Sage, and there are also so many invoicing system out there that we can use. And remember, when you are using these softwares, they are also capable of giving you reports. When I started in 2019, when I registered our business, we were using express accounts. And for the first quotation, the first invoice that I have sent to the client, I still have it. I still have access to it until today. So using softwares is very important because you will never lose the information. The information will be stored in a cloud. If you change your PCs, it's not going to affect your record keeping of businesses. I also emphasize the importance of record keeping as I move on. Basic accounting, like what I said, these softwares, they give you a basic accounting reports. They can give you a balance sheet. As a business owner, you must be able to interpret. You are not supposed to be an accountant. You are not required to be an accountant, but at least be able to interpret the financial reports, interpreting the income statement to see whether you are making a profit or you are making a loss. We do have some of our clients that doesn't understand at all what is a profit. They don't understand at all what is an expense, what is a sale, what is an income statement. When we give them reports, they just want to sign and move on. They are not interested in terms of understanding what is in their reports. That practice is not commendable because sometimes you will see that, especially when you have an accountant who is not qualified or the expertise is a bit limited, sometimes you get false reports. You will see you are receiving the annual financial statements with a profit of 1 million, and you are paying a tax of over maybe 500,000 or 200,000. You need to understand those things. Say, no, why? Because you are you already signed. I have one of the new clients that recently joined us. They had an accountant, and the financial statements were done. After the financial statements were done, they realized that the client was owing 580,000 in taxes. Then when they tried to engage the their previous accountant. The previous accountant just said, yeah, no, but you already signed. You agreed on this. This is what is there. This is what we have submitted. Because of basic things, just understanding the income statement to see where is the profit, where is the tax expenses in the balance sheet, where is the tax liability. This is very important as a business owner. And when you get reports from your accountant, just even if you don't understand it yet, have time to sit down with your accountant to say, what does this mean? Let your accountant to explain to you step by step. And as you go, you get to know and understand these reports. It is also important as a business owner to separate between business and personal funds. A lot of first-time clients that comes to our firm, we will see they have got, for example, 39 pages of bank statement per month, 39 pages. So when we analyze, we will see, no, man, in those statements, it's a mixture. There is personal expenses, personal income, other things that are not related to business. And the pitfall is it will increase accounting fees because the work that we are going to do is going to be a little bit more. If you were separating between your personal expenses and business, it means maybe we are going to get a 2-page bank statement per month. And the charges for that is not compared to the one that you are going to process 39 pages. And also it simplifies the tax filing. It will be easier for us to quickly process and produce the reports that are related to tax. And you know what happens if you are not filing your taxes? For example, let's say you are late, and in your business bank account, there were business income that you were receiving, there were church income that you were receiving, maybe there is a love offering that is taking place at your assembly. Then you say, people, you can send the money into my account. Then after that, you transfer the money to them. When SARS is assessing you, they just look at the income that you have received to say, in the financial year 2024, ABC Limited received 200 million income or 100,000 income. But on actual fact, maybe the income for your business was only 10,000 and the rest was the other income that were coming, which is not belonging to you. So the honors now belongs to you to prove to SARS that, no, the amount that was received was for love offering for pastor so and so. So it is encouraged that don't mix between business and personal expenses. You need to know about the profit margins, the pricing strategies, maximizing profitability. I have spoken about that. Sources of finance, I will touch on that as well as we move on. Then this is an example of a valid tax invoice, an example of a valid tax invoice. So you need to make sure, especially when you are registered for VAT, this is very important. I know a lot of accountants out there, they are only requesting you bank statements in order to file your VAT return, of which this is not the correct way of doing it. The invoices, it's a paramount source that is being used for your taxes. Bank statements is not support for SARS. You must understand that. Bank statement is not a supporting document for SARS. So if you are paying for any expenditure in your business, if you are paying for anything, you need to make sure that you have got a source document that you are using to make that payment. Don't just say, Mr. So-and-so or this company requested a payment of 5,000 through word of mouth or WhatsApp without a supporting document. You must make sure that you receive a valid tax invoice so that it will benefit you to reduce your taxes when we are calculating our tax at the end of the year. So a valid tax invoice, it must be written tax invoice, especially if it's for VAT, tax invoice. If it's not for VAT, just an invoice will suffice. But if you are registered for VAT, make sure that your invoice that you are receiving from your suppliers, they are written tax invoices. The suppliers that are registered, that are also registered for VAT. Make sure that the invoice you have got supplier details. For example, the company registration, the company VAT registration number. If it lacks the supplier VAT registration number, that invoice is not viable and is not eligible to be used for VAT purposes. You need to make sure that your VAT number as well is there on that invoice. It's not only the supplier's VAT number, also your VAT number. It's supposed to be disclosed on that invoices, and the addresses. They're supposed to be declared to be disclosed, your company address and the address of the supplier. A date. We must make sure that your invoice is dated, not just receiving an invoice that is not dated. You need to make sure that the amounts, they are separated between amount including VAT, the VAT amount that you are paying, and the amount inclusive of VAT. There are suppliers that can just give you an invoice which is written 10,000, but we don't know on 10,000 how much VAT are you paying. So you need to make sure that those amounts, they are well separated. And the description of goods or the description of the service that you are receiving. Don't just receive a service or an invoice without the description, the correct description of the type of service or goods that you are receiving. Because remember, other services, they are VAT exempt, others they are zero rated. So if it's not well disclosed, SARS have got the right of rejecting that invoice. Just an example. This is just an illustration of an income statement. If you want to understand, it's just income less expenses that you have incurred, then you get your net income. If there are taxes to be paid, it might be profit before tax, then you say you have your tax portion, then the profits after tax. And for understanding purpose, this is just a simplified example of a balance sheet with cash, current assets. We have got fixed assets and equity and liabilities. You just need to be familiar as a business owner. You have time to just understand those reports. The most important aspect of my presentation is understanding the tax matters. Understanding the tax matters. Lots of companies, lots of business owners, they run a business, they are engaged in the business activities without a clue of how the tax system works. They don't even know whether they need to pay tax. They don't even know. Other people, they think when they start to run a business now, they are required to pay taxes. Others, they think they are always required to pay tax at the end of the financial year. It's not always the situation that you are required to pay tax. So there are type of taxes in South Africa for companies. Number one is income tax. Companies, they are being taxed at 27% of the profits that you have earned during that financial year. So if you run a business for 3 months and you reach your financial year end, for example, let's say your financial year end is October and you opened your business in August. So you need to do your financials and make sure that you have submitted your tax returns. So you only pay tax on the profits that you have made, on the profits. You don't pay taxes on the losses. Let's say you earn a 1,000 loss. There is no tax that you are going to pay. It will be a carryover assessed loss that will be utilized in future. So in terms of calculating those taxes, it is important that you guys, when you are operating your businesses, know the expenses of your business and make sure that there is proper documentation. Make sure that we have got a tax consultant to assist you to do tax planning of your business. For example, let's say you are running a logistics company. When you are running a logistics company, obviously, you need to buy trucks. When you are buying those trucks, don't buy the trucks under your personal name. Don't take the insurances of trucks under your personal name. If you do that, that expenditure is going to be difficult for you to prove it to SARS that it was a business expenditure. So you need to make sure that all your business expenditures, they are under business, and you have proper documentation for that. Recently, we were working on a case whereby a company was assessed of taxes. It was over 17 million taxes. SARS says you are owing us 17 million. The previous accountant was not filing the taxes. He was just requesting tax returns, but no final filing was taking place. So at the end, luckily, we managed to convince some of the suppliers to change. That business was receiving invoices in the name of the director, most of the invoices. It was a challenge for us to prove. But at the end of the day, we managed to obtain some documentation whereby the invoices were in the name of the company. Back from 2015, we managed, the other suppliers, they managed to give us. So we managed to reduce the debt of that company to less than 100,000 from 17 million. But this is due because we managed to get the support that are in the name of business, of the company. So you need to make sure that I am overemphasizing. If you have any employee, business owners, if you have any employee, make sure that you are registered for pay as you earn. There are deductions that are taking place for pay as you earn. Don't just deduct without even paying over those taxes to SARS. But make sure, but make sure you are deducting the pay as you earn, you are paying it over to SARS, because failure to do that, it's a criminal offense. And when the employees are asking for their IRP5s, you must be able to produce something. You must be able to give them something. So make sure that you are registered for pay as you earn. And pay as you earn is not your expense as the owner. It's not your expense. But this is an expense of the employee. You are deducting from the gross amount of the employee. You need to make sure that you are deducting UIF. Yes, 1% is the cost for the employee and 1% is for the employer. So you need to make sure that you are deducting that. Failing to do that, you will see when the employee resigns or you dismiss the employee, when they want to claim from UIF, you will face challenges because you are not deducting and pay over the UIF to SARS or to Department of Labor. And make sure that you are doing annual reconciliations or monthly reconciliations for the UIF so that the names of the employees who appear there at the Department of Labor when they want to claim their UIF. SDL, if your total annual payroll cost is going to be over 500,000, make sure that you are registered for SDL as well. VAT, when you anticipate that you are now going to reach over 1 million sales, it's now mandatory for you to register for that. If you continue operating without registering, you will face charges from SARS if they find out that you were supposed to be registered for VAT. And for you to successfully navigate that, you need to just have a tax consultant that helps you to do all these things. You don't need to be knowledgeable in everything, but you can hire someone who can assist. Filing requirements and deadlines. Annual returns at the end of the financial year, where you are required to file within 12 months. So which means for 2023 financial year, if your year end is in February, by February 2025, you need to make sure that your 2023 taxes have been filed. Then provisional taxes, they are twice, depending on your year end, August and February. Pay as we earn, they are monthly, every month, a month on the 7th. You need to make sure that you have filed. Then VAT is biannually, and also it depends on your category that you have registered for VAT. Provisional taxes, August and February, as I said. Then filing season for individuals. If you are an individual, I'm going to just jump straight to that. If you are an individual, provisional taxpayers, If you are an individual, you need to make sure that your taxes have been filed by 21st of October 2024, which means the following Monday that we are getting is the deadline for filing our individual taxes if you are required to file. You can contact us or contact SARS to get knowledge of whether you are required to file or not. There are other statutory requirements that we overlook as small business owners. For example, CIPC. On any anniversary, each and every anniversary year of your company, you are required to file annual returns. There is also a new requirement now to file beneficial ownership, the shareholders or the owners of the business that you are running. Compensation fund. This one I listed it because a lot of companies, they are facing risks of employing employees, but they are not registered for COIDA, and they don't have any insurance for COIDA for the employees if they get injured at work or they have got a disease that is work related. So as an employer, you must think in advance, be clever, register for these things. They are not even expensive to do that. And make sure that when you have these situations, your employees are fully covered. And you as an employer, if you are working somewhere, you have got a right to ask an employer to claim for you COIDA when you get injured at work. So planning strategies and working with tax professional. The most important point here is you need to make sure that the person who is handling your business is qualified. The person who is handling your business is registered with a certain body so that they are accountable for something. Don't allow tax practitioners to submit your tax returns under your profile, because you'll be the only one who will be responsible if something happens. I know a lot of tax consultants out there, they request you e-filing details so that they can submit the tax returns on your behalf. You must make sure that they are also responsible for maybe sharing the access of e-filing profile so that SARS, they can take record of who does what. And you guys will be jointly liable for anything that happened on the tax submissions. Make sure that you have got proper record keeping in terms of SARS audits and anything that might require those supporting documents. In terms of tax professionals and accountants, you must also assess that your accountant is qualified in that specific industry, within that specific industry. Don't just say he's an accountant, but maybe he's an accountant for only mining companies. That's the knowledge that he has. He's not an accountant. He doesn't have knowledge or expertise in a logistic industry. So you need to make sure that you choose the right registered professionals within the industry. If you need help with that, if you need further information, you can contact us. There are different services that we provide as listed, and our contact details are listed on the screen. Then I am opening this floor for 1 minute. Any burning questions that we have, any questions that you want me to address before I end my presentation? I would suggest, because of my time, I say I overrun by 1 minute here. I would suggest that you guys write down your questions. Then on our next session, either tomorrow, if we have got enough time, or on day 3, we will be addressing all the questions that you may have.
Through you,
Okay.
through your trainer.
Okay.
Yes, I've got a question that I just want to ask and understand. I open a business. I register my business. I was having a business idea and I register my business. After registering the business never ran, but it's now registered under government. And it have never run like the way I was thinking.
Okay.
So my question is, am I gonna be taxed because that account that I opened the business with, I closed it because there was something that were happening in that account. The monies that were just disappearing. So I just decided to close that business account. But the business, I didn't close it under the government. It's still registered, but I know I'm no more using the same the business account that I opened with. So I don't know. Is maybe one day maybe the government can say that I must be taxed or what? How can that thing
Okay.
gonna maybe?
That's a very important question that you have raised. And what I want to submit to you, Cynthia, and everyone that is listening, when you open a business, whether it's running or it's not running, you are required to file tax returns. You are required to file annual returns. Like what I have said, filing tax returns, it doesn't mean that you are going to pay taxes. If the business was not operating, it means you are going to file your return under the dormant category. You are not going to file as the business was operating. It will be new. SARS wants to know, what is your business doing? Is your business making profits? Is your business making losses? Is your business operating? SARS, they are happy for you to submit the new returns at the end of each and every financial year. So you are still required to file tax returns. In terms of whether you are going to pay or not, that one I don't have an answer until we have seen the income and expenditure of your business, if you have any, until you have seen your bank statements, what was going on there. Maybe you might need to file returns as dormant, or you might need to file returns, but you have a loss, or maybe to pay a certain amount of tax. Another challenge that we are having in the industry is people, they will be submitting the annual returns showing revenue of 100,000, but the business is not owing, it's not trading. Remember, SARS is using what we call a big data strategy. They use all the tools that are available to confirm the operations of a business. So you need to make sure that when you declare that your business has earned 100,000 on your annual returns, it's corresponding, or there are no big differences to what you are disclosing on your annual returns. I'm not sure if I have answered your questions appropriately.
Yes, you do. But in extra question there, since I have closed the business account, can I maybe file under a personal account because the business account is closed?
Business bank account.
Which statement? Yeah, which statement now can I file with? Because the business account is closed.
You have got a right, even if you closed your business, you have got a right to access your transaction history, to access your bank statements from the bankers that you are banking with. You have got the right. So this one, you will need to visit the branch, then you tell them the situation, and they will be able to provide you with the statements. You can't do it under your personal. These are two different things.
Okay.
Yes.
All right. Thank you. I think I'm answered.
Okay. Any other questions?
Thank you, Mr. Makosi. I just wanted maybe for you to clarify, is there a threshold for paying taxes? say, your income tax as a business? Is there a minimum threshold? Maybe some may be interested to know, to say if my turnover is 500,000 or $1 million.
I got the question. Before I answer that, the organizers, would you allow me to go over a bit? I see we are over by 7 minutes now. I think quietness means yes. Yeah? Okay. So on both personal and companies, there are thresholds that are available in terms of taxation. I'm gonna give an example of a business. So as a business, it is important that you analyze, or you have got a tax expert who analyze the operations and the transactions of a business. For example, if your business is generating a turnover of say less than 10 million, if it meets all other requirements, your business qualifies to be classified as a small business corporation. If it's classified as a small business corporations, there are benefits that you can utilize under that category. For example, they might say the first 90,000 or the first 100,000 of your profit is not taxable. So in terms of business-wise, I can say yes, they are threshold, but depending on the qualification or the category that your business fall under. Number two, there is also a category that is called turnover tax. Turnover tax. That category, you are taxed based on your profits, only your revenue. They don't take into consideration your expenses. They just say, okay, you have made the profits of 1 million. So the rate that we are going to tax you for turnover tax is maybe, let's say 20%. Then you can just pay 20% on your profits. So it is important that you have got someone who can analyze the benefits of whether you want your business to be taxed using the turnover tax, whether you want it to be taxed using the small business corporation or just a normal business. There are parallel calculations that can be done. Then you can identify which one is effective for your business. Which one are you going to pay your minimum tax? For example, as well, it's just an additional one. When you are a director in the company, don't just say, I am going to earn 100,000 from my company without proper tax planning. You must make sure that you have a salary structure. How much expenses do I need to cover? And how much income am I going to earn? And how am I going to structure my income within the business to get as a salary? You can't just wake up to say, I want to earn 100,000 because I want to be 100,000 earner. You might earn less and get more, or earn more and get less, especially if you don't have a proper tax consultant who don't sit down and analyze the benefits of each and every category. I'm not sure if I have answered you, Trevor.
Yes, I'm answered. Thank you.
Okay. Well, I'm taking one last question, if there is any. Okay. It appears like there are no other questions. So guys, if you have any other follow-up questions, please keep it. We will be back again. Tomorrow we'll be available again. On Saturday, we'll be available for session 3. So just jot down your questions, then we will be able to address them in the following sections. Thank you, and I hand over to the program directors.
Thank you so much, Mr. Makosi. Thank you for such an informative and powerful session. I hope on compliance issues, none of us is going to be caught off guard. You have downloaded and we have uploaded a lot of things. Thank you so much for your time and for such information. Our businesses are not going to be the same again. Hallelujah. Just as a reminder, that our workshop is a 3 days workshop. We are also going to meet on Thursday, the 17th, same time, same platform. We are also going to meet on our third and last day